Gold prices fell on Monday after the world's biggest bullion-backed investment ETF saw its largest weekly outflow since January, despite the uncertainty in global and especially France's politics, while demand in gold's number one consumer nation China remained muted, writes Atsuko Whitehouse at BullionVault. The drop in China's reported house prices worsened in May, new data said today, but retail sales were stronger than expected, while industrial production growth missed consensus forecasts, as did fixed asset investment. Silver fell harder than gold, down alongside commodity prices such as iron ore and copper, which hit an 8-week low, down 15.0% from mid-May's new all-time copper high, after the People's Bank of China left its key interest rates unchanged for the 10th month in a row. With the giant GLD gold ETF reporting 1.2% investor outflows last week, the price of gold in US dollar terms today slipped 0.6% to $2,319 per troy ounce, halving Friday's rally even as European equities extended their losing streak after France's CAC 40 tumbled by more than 6% last week, its worst drop in over 2 years. That sell-off wiped 150 billion euros off the Paris stock market following President Macron's shock decision to call a snap election following his party's defeat in European Parliament voting. Gold priced in euros today fell 0.8% from end Friday's one-week high to 2,164 euros, pairing a third of last week's rebound, while the UK gold price in pounds per ounce edged lower by 0.5% to £1,830 ahead of Thursday's Bank of England decision on interest rates. Gold prices on the Shanghai Gold Exchange had, in contrast, edged higher overnight to a one-week high of 547 yuan per gram. But the Shanghai premium to London quotes, effectively, the incentive offered to importers buying gold abroad and bringing it into the metal's number one consumer market, fell to a one-week low of $26 per troy ounce, signaling softer domestic demand. Previously averaging about $8 per ounce, the Shanghai gold premium rose to an all-time high of $120 in September 2023 after Beijing restricted private sector bullion imports. The premium then rose again, back above $50 this April, as the precious metals' continued surge to new all-time high gold prices drove up Chinese investment demand in the world's second-largest economy. Following that peak, China's wholesale gold demand experienced its weakest May since 2020, when demand was affected by the COVID pandemic, says Ray Jia, research head for China at the mining industry's World Gold Council. End-user demand withdrew 82 tons of gold from the Shanghai Gold Exchange's approved warehouses in May, down by more than one-third from April's 131 tons and 34% below the 10-year average, according to Jia. Nonetheless, due to demand strength earlier this year, gold withdrawals have totaled 736 tons so far in 2024, 35 tons higher year-on-year, even as new record prices. In contrast, and after Chinese gold ETFs grew for the 6th month running in May to a new record size, the giant Spider Gold Trust listed in New York and Vaulting Bullion in London and the USA on Friday shrank by 4.0 tons, taking its weekly outflow to 10.3 tons, the sharpest shareholder liquidation since the first week of the new year. That left the GLD needing only 10.2 tons more than March's near 4-year low of 815.1 tons to back its shares in issue. World number 2 gold-backed ETF. The iShares gold product, meanwhile, held unchanged in size last session at its smallest since March 2020, needing 1.7 fewer tons of bullion to back its value across the week, the biggest decline in a month. France's current finance minister Bruno Le Maire joined President Emmanuel Macron in warning against voting for Marine Le Pen's Eurosceptic national rally, saying that the Eurozone's second biggest economy faces the risk of a financial crisis if the far right wins with their heavy spending plans and VAT tax cuts. British opinion polls, meanwhile, point to electoral extinction for the UK's ruling Conservative Party at the 4th of July general election, as Keir Starmer's Labour Party shows its biggest lead since the brief and disastrous government of Prime Minister Rishi Sunak's predecessor, Liz Truss, whose unfunded tax-cutting plans triggered a crisis in the gilts market. Prices for silver, which finds nearly 60% of its annual demand from industrial uses, fell faster than gold, down by 1.1% to $29.23 per ounce. iShares' giant silver ETF trust expanded by 2.2% last week, the biggest weekly inflow in 7 to the largest holding in 2 months. Please like this video and subscribe to our channel